What's going on, guys? Welcome back to my channel. Welcome back to another video, and welcome back to another week in the markets. So this week I want to share with you guys markets, the trades that I'm gonna be interested in trading this week. And last week I took a loss, which is completely normal. This is just part of the game. But this week I'm seeing good opportunities. So, which by the way, they are followed by last week trades. And let's just see what the market does this week. So let's just go right into it. So the first pair that I'm interested in trading is USD JPY. As you guys know, I think I was probably trading this pair last week. And what I'll be waiting for is, the first thing that I do when I'm gonna enter a trade is first I do my top-down analysis. Top-down analysis is to determine whether the market is bullish or it's bearish. And the way that I do it is I use the weekly and the daily and the 4-hour time frame to identify the trend. So I'm seeing that the background is super dark. Let me just turn on this light because I am not a white person. I'm a little bit light skinned, so I need illumination, you know what I'm saying? But I use the weekly, the daily, and then the 4-hour to identify the trend. And the way that I do it is I analyze the structure on the weekly time frame, and I see that this weekly time frame is bullish. This is the higher high, and this is the higher low. I wouldn't really count this as the higher low because there is no clear elbow, there is no structure right here. So I have the weekly time frame bullish, the daily time frame is bearish because we see that in the past price was creating higher highs, higher lows, higher high, higher low, higher high, higher low, oh shit, higher high, and then it shifted the structure. So the way that market structure works is that on a bullish trend, price creates higher highs and higher lows. But the moment that price breaks below the higher low, which is this structure right here, the moment the price breaks below it, we have a shift of structure, meaning that price is shifting from bullish to the bearish. So that is what happened in this scenario right here. Price stopped creating higher highs and higher low, and it created a new lower low, which is this structure right here, and this is the lower high. So I have the weekly bullish, I have the daily bearish, and the 4-hour is bearish. The way that I trade this is, and I say the way that I trade because there are thousands of ways to trade. Everybody has a different strategy. Everybody has uses different concepts, and I think that's pretty cool. But in the way that I trade, this is the lower low, and this is the lower high. When it comes to trading, I feel like there is no black and white strategy or concepts because everybody uses a different one. I've seen people using very different ways of trading. So I have the 4-hour bearish. This is the lower high, and this is the lower low. All of this structure right here is basically nothing. It's just a retracement. And right now I have the weekly bullish, the daily bearish, and then the 4-hour bearish. I need two consecutive time frames in sync, two time frames in sync in order to be interested in a trade. What does that mean? I need either the weekly and then the daily in my favor, or the daily and the 4-hour in my favor. Or if I have 3, weekly, daily, and then the 4-hour, even better. But what does that mean? That I either need the weekly and then the daily, either bullish or bearish in my direction. That will tell me that I'm trading with the trend. So in this case, I have the daily bearish and then the 4-hour bearish. If I have, for example, the weekly bullish, the daily bearish, and then the 4-hour bullish, for example, I no longer have 2 consecutive time frames in sync, because 2 consecutive time frames in sync is either the weekly and then the daily, or the daily and then the 4-hour. That's 2 consecutive time frames in sync. It has to be consecutive, one behind the other, one after the other. So now I have weekly, no, now I have daily and then the 4-hour bearish. So my strategy, or the way that I trade, is pretty simple. I use kind of like a checklist, which the first thing that I need is the trend. The second thing that I need is an area of interest. Then the third thing that I need is entry signal. And then the fourth thing that I need is a pattern. I'm gonna go right into it. Now I have the trend, because the trend is I identify the trend through, with my top-down analysis. So now I have 2 consecutive time frames in sync, which is the daily and then the 4-hour. So that tells me that I'm trading with the trend. So I have the trend checked off with 2 time frames. So the next thing that I need is an area of interest. An area of interest is an area where price has a high probability of reacting from that area. So the way that I find an area of interest is within the lower low and then the lower high. In this case, because I'm going to sell. But if I'm going to buy, I need to place it inside of the higher high and inside of the higher low. Placing an area of interest above the higher high or below the lower low, in this scenario, it makes no sense, because then now the structure will change. Same thing with placing an area of interest above the lower high, because then the structure will be bullish and then it will make no sense. As long as we are inside of this lower high and inside of this lower low, then the structure, the market is bearish. So an area of interest is identified by 3 touches. An area of interest needs to have a minimum of 3 touches, which in this case I have 1 touch whenever we are under, we have 1 touch. Whenever we are under, we're rejecting to the downside, and whenever we are above, we're heading up. So in this case I have 1, 2, 3, and 4 touches. Right now we are under, so we have a higher probability for a higher probability of rejecting to the downside, because it has done it in the past. So I already have my area of interest, and one thing that is important when it comes to area of interest is that I only find an area of interest on the weekly and then the daily. In this case, I'm not gonna use an area of interest on the weekly because I don't have it, and the weekly is bullish. If I'm going to place an area of interest to sell, I need to have that time frame aligned with the area of interest. For example, I cannot place an area of interest to sell on the weekly because the structure is bullish. So if I'm going to sell, I place my area of interest on the daily, because that's what I'm going to do. I'm going to sell, and the daily time frame is also bearish. So I already have an area of interest, and as I said, I only do it on the weekly and then on the daily. I use the weekly, the daily, and then the 4 hour to identify the trend because I need two consecutive time frames in sync. But I use the weekly and then the daily to identify the trend, the area of interest. Sorry. And why? Because the market is going to reject. It's gonna have a reaction from an area of interest of the weekly and then the daily. More, I mean, the market is going to react. It's going to respect an area of interest on the weekly and then the daily a lot more than it will have than it will respect an area of interest on the 4 hour, the 2 hour, 1 hour, etc. So after that, I need my entry signal. And as of right now, I have the trend in my favor. I have the area of interest, which is this area right here. And another thing that is important when it comes to area of interest is that it cannot be bigger than 60 pips. In this case, it is 38 pips, but an area of interest cannot be bigger than 60 pips and it cannot be smaller than 50 pips. So yeah, no, my entry signal is these candlestick rejections, these dojis, these pin bars from this area of interest. That is my entry signal because that is showing me that the market is rejecting this area. So that is the third thing when it comes to my checklist. And the fourth thing is pattern. A pattern, I use two types of patterns. Number one is a reversal pattern, which is the head and shoulders, which is this pattern right here, this left head and then the right shoulder. And I also use the break and retest. A head and shoulders is what I'm waiting for right now, which is this right here, which is forming as of right now, which is this left head, and I'm waiting for the right shoulder. And a break and retest is this right here. A break and retest is when price breaks above or below an area that it was rejecting in the past. For example, this area right here, whenever price is under, we're rejecting to the downside. If we approach this area, price can potentially have a reaction to the downside as it has done it in the past. So a break and retest is when price breaks above and then retested it. And instead of it using it as a resistance, it uses it as a support. So yeah, that's what I'm waiting for in USD JPY. GBP CAD, I'm waiting for price to have a reaction from this support level. I love how price created this dojo right here and how it is, and I love also that rejection from this support. But what I'm waiting for is for this break and retest, as I was talking before, and I'm waiting for price to break above this area and then use it as a support to then buy. And got JPY, it's also a market that I'm interested in trading. I have the weekly time frame bearish. This is the lower low right here. This is the lower low. This is the lower high. And I also have this head and shoulders right here, this left head and then right shoulder, which I also have this area of interest right here on the weekly time frame, that whenever price is under, we're heading down. Whenever price is above it, it's heading up. Right now we are under, so I'm waiting for price to have a reaction from this area. And this is something that I love to see, is that when an area of interest on the weekly, it also overlaps. I don't know if that's the right word, but it's when an area of interest on the weekly happens to also be an area of interest on the daily. As I said before, an area of interest needs to have a minimum of 3 touches, In this case, I have one touch, two touches, and then three touches. So on the daily time frame, we also have this area, which is the weekly time frame. But on the daily time frame, we have one touch, two touches, three touches, four, five, six, and then seven. So that shows me that it is also an area of interest on the daily. So I love that. I love to see that. And I also have this round psychological level 114, 500 to make it simpler. So what I'm waiting for, and I also love this rejection from this area. What I'm gonna be waiting for is this break and retest below this area because right now price is above this area and I cannot sell if we are above this area because whenever price is above this area it can use it as a support. What I'm going to be waiting for is for price to then break it under, retested it as it did it in the past. Price broke below this area, retested it, and then sold off. So that's what I'm waiting for. For price to break under, retested it, to then sell off. So the other markets, they're not as cute as I thought. So this one is looking good. We are having, USD CAD is looking good. I'm waiting for the retracement to this area to then sell. Euro CHF, nothing. AUD CHF, nothing. And Euro JPY, I'm no longer interested in it because it closed above this area of interest right here. And whenever price is above it, use it as a support. Is what I was saying in this example right here in CAD JPY, that I am waiting for price to break under this area, retested it to then sell. Because when price is above an area of interest, it can use it as a support. So whenever price is under, it can use it as a resistance. So in order for me to sell, I'll have to wait for price to break under this area, retest it to then sell. And I doubt that that is going to happen this week. So let's just see what the market does, guys. So guys, welcome back to another update, and let me show you what the market has done so far. Haven't taken a trade so far, but I believe that I'm not gonna enter a trade this week because it's already Thursday, and I don't take trades on Friday just because the trades that I take they typically last 2, 3, 4, 5 days. It depends. But the market closes on Fridays. So Saturday and Sunday there is no session available for me to hold my trades, and I don't have another opportunity. I don't have a good opportunity to take a trade on. So, but what I see is that next week, what happened a couple of weeks ago might repeat itself. Here we have higher high, higher low, push up. Here we're having higher high. We already had the higher low to potentially have the push up next week. I trade based off of patterns, based off of things that repeat themselves over and over again. And we're also above this level of support and resistance that whenever we're under this area, we're heading down. Whenever we're above it, we're heading up. So we're also rejecting this EMA. GBP CAD, I didn't take any trades because I already had my entry signal, but as you guys know, at the beginning of the week, I was waiting for price to break above this level of resistance. That whenever price is under this area, we're heading to the downside. I cannot buy directly into this resistance level because then price could head down. Price broke above this resistance level, but it didn't retest it to then buy. If I would have bought at this point right here, I would have taken this ginormous loss. But what I'm waiting for next week is going to be an inverted head and shoulders, something like this. for next week. And another thing that I like a lot is that this candlestick closes like as it is closing right now. I mean, we still have one day in order for this candlestick to close, but that would have shown me that price is rejecting this support level, support and resistance level, that whenever we're under this area we're heading down, or we're above it we're heading up. And one thing that I want to share about this trade is that I've been waiting for it for about a month, and obviously I have learned a lot of patience through swing trading, and I feel like this is one of the ways that God is using to make me a better trader, better person, and a much more patience person. And I've been waiting for this trade for almost a month and a couple of weeks, and I haven't gotten my entry yet. So it sucks because I mean I've been looking at it and nothing going on, but I've learned that this is part of the game, this is part of the process, and it's normal. And I was kind of mad at the beginning, and I was like, "Oh, I'm gonna take it out of my watch just because I'm not getting any." I've been waiting for it way too long, but what I've realized is that the market doesn't have to do what I want it to do. The market is supposed to do what it's supposed to do. You know, the market doesn't even know who I am. It doesn't even have to fulfill my needs, quote unquote. So yeah, that's something that I've learned, obviously, the hard way. But I hope that it be useful for you guys, because sometimes we think that the market has to do whatever we want it to do and not what it is supposed to do. So it doesn't matter if it takes 3 months for this trade to play out, it's what it's going to do. You know, the market is going to move however it wants to move. So patience, guys. Euro CHF, I was looking to buy at the beginning of the week, but the structure changed. Daily time frame was bullish. This was the higher high, this was the higher low. Price broke below this higher low, making this the lower low, and then this the lower high. And I used DJPY, already had the push, but didn't get my entry. Got JPY, nothing. And USD CAD, this is the thing, guys. I mean, price already wick into this sun and then went down, and I didn't catch. I was not able to catch this trade, and it happens, guys. This is the reality of this business. This is the reality. This is the risk to reward of the business that we're in, and it sucks. Yeah, but eventually we will reap the rewards of that work. So guys, I hope you guys like this video. If you guys want me to keep making more videos like this, just let me know in the comments. And see you guys in the next one.